Well, good afternoon. Thanks for checking out this video. This is really specifically catered to people who already own houses and they have the option, you have the option of refinancing. And maybe you don't really know what those options are, or maybe just don't have a lot of information on what you can do or why it makes sense. And so just to clear the air, first of all, it doesn't always make sense to refinance. A lot of times there can be loan officers that just to make an extra dollar, get everyone to refinance. It doesn't even make sense for the situation. And so that's not at all the case here. And it doesn't always make sense. But for those that it does, and for those that maybe just don't have enough information on why it might make sense, that's why I want to do this video. So first of all, there's two kinds of refinances out there. The first one is called a rate term refinance. And that's kind of a situation where maybe you got your house years ago and you have a higher interest rate, right? Maybe it was way before 2008. Maybe it was in the late 90s or early 2000s, and you have a higher interest rate. Maybe it's 8%, right? So right now rates are lower, right? They're around that 4 or 5% range, depending on your credit score. And what you can do with a refinance is you can actually lower that rate, and depending on a couple other factors, there's a good chance that you can probably lower your monthly payment and lower that rate, and it kind of helps with the whole financial picture. You can use that money for other means that you're saving. Okay, so that's one option. The other option is what's called a cash out refinance, which there's a few different reasons why people would do this. But basically, when you have a lot of equity in your home, or enough equity in your home to take money out, like maybe you can take $10,000 or $20,000 or $50,000 out of your home because you have a lot of equity. Well, the reasons why you might do that is because maybe rates are good and you can take more out rather than going to the bank and taking out just a normal loan or taking out some other kind of loan. But you can probably get a better rate now by refinancing your house. And you can take cash out. Maybe you want to use it for a remodel. Maybe raise the value of your home with the remodel, and you can add a bathroom or add a bedroom, whatever you want to do. And then there's other options, like I know of people who have a lot of student loan debt. They have a house, but they got a lot of student loan debt that they're still paying off. And basically you can, pay off all that debt, have it basically come under your house, but it's saving you money every single month because the interest rate on your house is much lower than the interest rate that maybe was on your student loans. That's another option, and there's other things too that you can use that money for. But a great way to leverage your home, utilize what you have, and actually maybe save money every month going forward. So just something to think about. If you have more questions about that, please do not hesitate to give me a call. All right, take care.